Stop gambling with leveraged ETFs. Here's how I trade them strategically. Yo, what is going on, premium chasers? I hope you are having a God-blessed day. Today, every single person that comments down below is going to get our QQQ leveraged ETF playbook. That's basically going to go into tremendous amount more detail into today. Yo, what is going on, premium chasers? I hope you are having a God-blessed day. Today, every single person that comments down below is going to get our leverage ETF playbook specifically designed for the QQQ, which we're going to be talking about very heavily today. So if you want that leverage ETF playbook specifically for QQQ, right, I will give that to every single person that comments down below. And while you're down there, right, hit the like button, hit the subscribe button. Let's get this Monday started, guys. So listen, this is going out to all the degens out there because I know some of you somehow still set yourself up for failure with a lot of things. And, you know, the leverage ETFs is the hot topic you guys love asking me questions about. So I'm going to talk about some of the leverage ETFs that I like to personally do and how I use them, okay? All right, now listen, full disclosure, guys, I only do this when I'm bored. Like, genuinely, I'm being completely honest and transparent. I am not usually trading a lot with the leveraged ETFs, right? I'd rather go actually put my money to work in companies I believe in long term, right? Instead of playing this very risky, much more riskier game of leveraged ETF. But with that said, all right, let's talk about it, all right? Because I've had a lot of success in the past with trading leveraged ETFs with QQQ. So there are two primary ones that I use. So if we look, I'm going to assume you don't even know what a leverage ETF is. So let's just show you. And I'm going to explain this simply because everybody out there, they always got the ulterior motives, right? They're trying to trick your money, right? So look, QQQ is up 30% today, okay? The leveraged ETF TQQQ, right, is up 9.9%. What does that mean, Pete? Well, what is that? Like, why is that up 3 times more? Well, that's because it's a 3 times leveraged ETF. All right, look at that. Now we all understand what a 3 times leveraged ETF is, right? So this is a bullish, right? It's 3 times the bull of QQQ. All right. Then the other one, right, is SQQQ, right? And that is 3 times bearish, right? It's going down, right? So if you do obviously market's open, so these numbers are constantly changing, right? But if you do 3 times, right, this one's going to be 3 times positive. This one's going to be 3 times negative. Boom, bada bing, you understand what leverage ETFs are. These are scary. Why are these scary, Pete? Well, because it is not uncommon. What you're seeing on your screen right here, this being down 9-10%, this being up 10%, these are the kind of moves that why people love to do leverage ETFs, because you can make a lot more money, right, on these moves, right? Think about it, right? If you put your money into QQQ here, you'd only be up 3%. Being up 10% though, like 3 times that's massive, right? But with that is a massive amount of risk, guys. And you got to literally, if I would, I would strongly, again, read the shirt, right? But for me, I don't even consider myself a trader. I'm like a short-term investor, right, in companies that I like. But one thing you got to understand before you get into this, right, and get the premium blinders on you, right, is like how this fits into your overall strategy. I can't stress it enough, right? If you're just jumping into this stuff, premium chasing, you're gonna get hurt and you're gonna get burned. And I would hate for that to happen to you, right? So to me, again, I only do this when I'm really bored and I like have extra money and collateral that I'm just like, yeah, whatever. Let's get into some of this degen stuff. Let me get the blood pumping a little bit. But usually I'm not into this stuff, all right? But I'm going to show you guys today because obviously there's 2 ways to play this, okay? There's 2 ways to play this. There's actually way more than 2 ways, but we're going to show you just some simple ways right now, all right? So for me, obviously market blew up today, guys, right? Tariff suspended 90 days, blah, 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 right? All the news, right? These are the times we live in, right? Lots of opportunity out there. We're talking a lot about that today in our groups. And join those groups. Obviously, all the calculators, everything is free. The links will be the Facebook group link will be in the description. So join that group. It's a real cool community. So how do we play this with the leveraged ETFs? Well, number one, and again, this is all like your personal theory, right? Because nobody knows what the stock market's going to do, right? But for me, I'm like, you know what? I think there's a little bit too much positive sentiment happening today. I'm like, to have a massive jump up 3% across the board, you know what? I think there's going to be a pullback. I totally think, I totally think we're going to have a rebound here tomorrow or in the next 7 to 14 days. You're going to see why I think all that here in a moment, right? And if you think that, right, this would be the play you would consider adding to your strategy, right? So obviously, right, SQQQ is down 9.5%. Let's go over to the options chain. Let me show you what I'm talking about. Try to make it as full circle as possible for yourself. We're going to go to the trade options. We're going to click sell a put, right? And we are going to go out about, let's say, for me with these guys, short. Right, I like to go maybe sometimes close to 30, but literally rarely ever. It's going to usually be 7 to 14. Like that's like so key. So like all of these don't do it. This is short-term stuff. Like at the end of the day, you're just premium chasing on these. Like that is the goal, right? Like it really is the goal to just get the premium, get out and hope for the best. Because again, this is a much more riskier strategy. So we'll just go out 11 days right here. Okay, so what we're seeing on this chain right now is us being able to sell puts on SQQQ, right? So for example, we could do these 25s, right? 25s, if we open this up, we'll see our delta is about 0.32 and we're collecting about $63 in premium, right? These are at the time of this recording, guys. Obviously, your numbers are going to look completely different on your screen at the time that you do them, right? So if I push this into our cash secured put calculator, right? Our premium here is $63, right? We are putting up collateral of $2,500 and we're getting about a 2.52% return in 11 days. Fantastic, right? A lot of you degens love to do multiple contracts of these too. So you could see how that would pump up, right? To 25. Now, that's assuming, right, that your strategy is that, hey, you think this is going to, bounce, this thing is going to, not continue to drop, right? That's your theory. And well, how do we base these kind of theories? Like basic technical analysis is what I like to do. So we go to our chart. Obviously, we are trending towards our bottom Bollinger Band here, right? Now, it does have room to even go, right? Now, these spreads on these leverage ETFs with like literally everything goes out the window with, in my opinion, with leverage ETFs. You can have your own, all your Fugazi that you meant, but you make yourself feel comfortable, blah, blah, blah. At the end of the day, no one knows what a stock is going to do or an ETF is going to do. Nobody. Okay, especially with leverage of ETFs, it has to almost be a belief that you have, right? Because like it really does. But you can of course look at the technicals. I'm not saying don't go look at the deltas, look at the technicals. I'm just saying they mean a lot, but they don't mean a lot, right? So we could see this is trading towards this bottom Bollinger Band area. So this is the time that we want to look at the cash secured puts. Okay, because when we look over it, for the most part, we do bounce off that and we kind of come back up. Okay, now you can go lower, but that's where you start to really, right, obviously lose a lot more of that premium that you're going to be collecting here, right? So let's look at the 24s here, right? That's a lot more lower of a delta. Personally, that's the stuff that I do. I don't, like, I really try to avoid assignment on these kind of things. I genuinely do. I will take less percentage because again, my dates are a lot shorter. My expirations, I'm looking at 7 to 14 day out stuff. I'm fine not hitting like a big target, but over a month, I'm still seeing a good ROI, right? But like, for example, let's look at these 24s. We're collecting 30, right? So if we do 30 right here, right, and we're putting up 24 of collateral, you're getting about a 1.25% return here. Now, obviously, that expiration date is 11 days, we said, right? Obviously, you're not going to be able to do this trade 33 times. It's just for my brain to be able to look at in terms of closing out early. But for me, I like that. Me personally, I like that. Okay, and these numbers obviously will look different at the time. They're always constantly changing, guys. These are only what I'm seeing right now this morning when I'm shooting this video, right? But you could keep going. You could keep going lower, of course. Okay, that's how I play when I feel that there is going to be a rebound. When I think that the market is going too green, right? I will go on SQQQ, right? And I will do a cash secured put, right? Because I believe we'll have a pullback on QQQ, right? And when we have a pullback on QQQ, we should see a rebound on SQQQ. I know. This is borderline too much for me, even. I'm gonna be honest with y'all, right? Because I just like to just do my quad options and I relax and I can sit on my hands and I don't have to do the like more advanced stuff, right? Listen, simple work. Spit just went everywhere. Listen, the more you add complexity into your life, into your investing, the more complicated you make it, the more chances you have of losing. You just do. It's just a fact of the matter. The more you complicate things, the more room for errors you have, and you are not a professional trader. I'm sorry, most of us, I'm not a professional trader. You're probably not a professional trader. If you were a professional trader, you'd be working at like a high-frequency trading firm if you were that good or something and making millions of dollars and millions of dollars a month with your trades. Like, that's a fact. No cap, right? So let's just come back to reality and stop thinking we're seeing everybody on YouTube as a pro trader. They're not, fam. They're not pro traders, okay? I'm going to be the one to tell you, all right? So for me, simplicity wins. For you, do you, right? So how do I play TQQQ? I've had obviously a lot more success with TQQQ over the years because... why, guys? Who knows the answer, right? Who knows the answer why you would have more success with TQQQ over the years, right? Because typically the bull markets last longer than the bear markets, okay? So typically on the bear market, right, they'd last what? It was like, what was this bear? What just happened in the past month? Right? Like, come on, this is crazy. Like, we live in just such strange times, right? So we could see. Obviously, TQQQ, right? 3 times QQQ trading at 10%, right? Up 10%, right? So again, we can go look at the chart. The spreads are going to be insane here right now, but we are towards the top of the Bollinger Band, right? We are towards the top of the Bollinger Band, okay? So right here, we're just going to go to TQQQ. Now, listen, guys, you can do, right? And like, this is where you have to figure out your strategy. Like, I would sell puts on TQQQ too. Like, if I think like this is the way you can play this in a multitude of ways, right? Like, if you see a pullback on TQQQ, right, you can then sell puts on TQQQ, right? And you kind of get a similar result as if you were doing them on SQQQ. You know what I'm saying, right? So I would do that a lot in the past as well. I would, like, if I see a bullback, because if we're in a bull market and like we see like a big, a big overreaction drop, like I will then sell puts on TQQQ because I feel that this drop is way overreaction. It's a big overreaction, and I think we're gonna have a big rebound. I would do that move on TQQQ, right? And if I end up getting assigned, and then it doesn't matter because I still believe we were in that bull market, right? And then I would sell my covered calls against it. You see what I'm saying? So, for example, let's just do, selling, and you could still sell puts here, but they're risky, right, man? Look at that. Oh, it's so tempting. It's so tempting. Oh, look how tempting these puts are, right? 4 days. In 4 days, making $194. That is a risky move, my friend. That is a risky move because if we have that pullback that we just talked about with the play with the SQQQ, right, you're going to be assigned. And what's my rule? Avoid assignment on leverage ETF if possible. Right? If possible, avoid it. All right. Again, this kind of goes against a lot of the quad option stuff. This is, bored. You're very bored, and you just need to scratch that itch that you have, right? So selling a call, right? So this is if you did get assigned, right? TQQQ, right? Again, look, let's say you did unfortunately get assigned, right? You got assigned, and now you want to sell calls. Well, you could do that, and I still like the 7 to 14 day time frame. Obviously, the premiums are going to be insanely juicy right now, but you could see. Right, this is where you want to do the same exact play, right? Look at the deltas, right? If I'm doing a call, I'm trying to get rid of these shares. So it's a little bit different than if I'm doing the put, right? The put, I have my low deltas, right? But when I'm trying to do my calls now on this thing, I'm trying to get out of this thing, man. Like, I'm genuinely just trying to get out of this thing and move on with my life. These are much more shorter time plays. So I literally might just go 1 or 2 strikes above, let's say 66 for this example, right? I will literally go at deltas that are like giving me a 50-50 shot. Right? Because I might even go right at them. If I really feel like I just want to get rid of them, I might just literally go right or a strike above the market value, right? But that whatever play is for you, right? If you want to, for me, I'm not trying to hold leveraged ETFs, right? That's just a bad idea, like in my opinion. That's just my opinion. Maybe that's not your opinion, but I'm going for more aggressive stuff when I'm doing like the call side of it. I'm trying to get out of this thing as quickly as possible. Guys, if you want the full ebook that talks about TQQQ, SQQQ, and how this can fit into your strategy, drop a comment down below, hit the like button and the subscribe button. I will personally respond to every single one of you. Also, if you are somebody that wants to really have a more hands-on approach, right, and learning how you can set up your option selling portfolio over the course of a year, yes, a year, I do recommend always giving this a year, because as you can see, we don't trade a lot here. Check out the first link in the description of today's video. It's our 1-year long incubator program. So check that out, and it gives you a bunch of details on it, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.